The global financial system is quietly going through one of the biggest shifts in living memory, and most people don't even realize it. For nearly 80 years, the US dollar has sat unchallenged at the very heart of world trade, investment, and finance. It has been the backbone of global reserves, the key for international loans, and the currency that oil, gold, and almost everything else has been priced in. But right now, in real time, another contender is stepping into the ring, and it's moving much faster than anyone expected. That contender is China's currency, the Yuan, also known as the renminbi.
And here's the key. This isn't just about economics. This is about power, about influence, and about reshaping the very structure of global finance. China is not just hoping the yuan will rise. It's methodically building the pipelines, the trust, and the incentives that allow other countries to actually use its currency. That means we may be living through the beginning of the end of dollar dominance. Before we dive deeper, if you find this kind of content valuable, don't forget to hit the like button and share this video. It really helps more people discover discussions like this. Now, let's get into it. For most of the 20th century, the dollar's dominance was unshakable. It rose after the Second World War, became the centerpiece of the Bretton Woods system, and by the early 2000s, over 3/4 of the world's foreign reserves were held in dollars. But that peak is behind us. The dollar now makes up around 55% of reserves, down sharply from its high point, and the cracks are showing. U.S. debt has exploded past $37 trillion. Deficits keep widening, and political gridlock in Washington often shakes investor confidence. The dollar itself has had its worst start to a year since the early 1970s. Meanwhile, countries are watching how Washington uses the dollar as a weapon through sanctions, restrictions, and asset freezes. And many of those countries are asking a simple question: is it safe to rely on the dollar alone? For China, the answer is no, and the solution is obvious: the yuan. Just 15 years ago, almost none of China's cross-border trade was settled in its own currency. Today, more than half of it is. Think about that leap for a second. In 2019, only 14% of China's trade was conducted in yuan. By 2025, it's more than doubled. Chinese banks have shifted hundreds of billions of loans into yuan, and the stock of yuan-denominated debt has tripled, crossing $300 billion. The turning point came with the war in Ukraine, when Western countries froze nearly $300 billion of Russia's reserves. Moscow scrambled for alternatives. Today, more than 90% of trade between Russia and China is settled in yuan or rubles. That number used to be below 30%. The Moscow exchange now clears more yuan than dollars. Russian companies are even issuing bonds in yuan. And Russia isn't alone. Saudi Arabia has started allowing some oil sales to China in yuan. Now let's be clear, the dollar still dominates the oil market, but the symbolism here is enormous. Oil is the backbone of global trade, and China is the world's largest oil buyer. If even a fraction of those deals shift into yuan, the petrodollar system begins to erode. Brazil is another example. It signed a yuan clearing agreement, and soybean and iron ore shipments are already being settled directly in yuan. For Brazilian exporters, that means less dollar risk and faster payments. For China, it locks in one of its key suppliers into a yuan-based system. So how is China pulling this off? It's not by accident. Beijing is deliberately building the plumbing of an alternative financial order. First, swap lines. China has set up currency swap agreements worth over $600 billion with dozens of central banks. That's essentially a lifeline. It gives countries in crisis direct access to yuan, which they can use to pay bills or finance trade. Second, clearing banks. There are now yuan clearing banks in over 30 markets worldwide, from Turkey to Mauritius. This means businesses don't need to go through the dollar anymore. They can just settle transactions directly in yuan. Third, digital currency. China has launched a digital yuan, already in domestic use, and it's testing cross-border applications through the M-Bridge project alongside the UAE, Hong Kong, and Thailand. It's basically creating a high-speed rail system for money, faster, cheaper, and completely outside US control. And then there's CIPS, the cross-border interbank payment system. Think of it as China's version of SWIFT, the backbone of global payments. CIPS already has more than 1,700 member banks across the world, and last year it processed $24 trillion worth of transactions. That's growing at over 40% a year. Here's the bigger picture. The yuan is becoming more than just a currency. It's becoming part of a system China controls, and one that allows countries to trade, borrow, and invest without touching the dollar. And yet, history reminds us that replacing a dominant currency is no easy feat. The US dollar took decades to rise. It wasn't just about America's economy, it was about credibility, trust, and infrastructure. The yuan is still young in that sense. It makes up only about 4% of global payments and 2% of reserves. But here's the catch. The world today moves much faster than in the 20th century. And China is advancing carefully, strategically, and at times, opportunistically. Think back to 2009. China first tried to internationalize the yuan right after the global financial crisis. But when markets turned volatile in 2015, Beijing pulled back and tightened controls. This time, they're more patient. They're pushing gradually, making sure foreigners actually want to hold yuan by offering cheaper loans, deeper trade links, and bonds that are attractive to investors. Speaking of bonds, countries like Hungary, Russia, and soon Pakistan are issuing yuan-denominated debt. Kenya and Brazil are considering it too. Every time a country raises money in yuan, it reduces its reliance on dollar markets. Now, let me pause here. If you're following along, I'd love to hear your thoughts. Do you think the yuan could ever truly rival the dollar? Or will it always remain a secondary currency? Drop your thoughts in the comments. I'll be going through and responding because this debate is at the core of what's coming next. Let's look at the geopolitics. The rise of the yuan isn't just about money, it's about power. The US has long used the dollar as a tool of influence. Sanctions work because the dollar is unavoidable. But if more countries trade in yuan, those sanctions lose bite. It's not that China wants to overthrow the dollar tomorrow. Its goal is to chip away at its dominance, slowly, steadily, and permanently. Even if the yuan grows to just 10 or 15% of global reserves, it would fundamentally change the balance of global finance. A multipolar system, not a dollar-only one, is emerging. That's the world China is preparing for. Of course, challenges remain. China still keeps tight control on capital flows. That makes some investors nervous because you can't move money in and out as freely as you can with the dollar. And yes, trust takes decades to build, but momentum matters. And right now, momentum is clearly shifting. The road ahead is pretty clear. Every time China settles oil in yuan, every time a new bond is issued in yuan, every time a swap line is activated, the system tilts away from Washington's orbit. It's like gravity, subtle at first, but over time, it changes everything. We're not looking at the end of the dollar tomorrow morning, but we are watching the end of a dollar-only world. The yuan is carving out its own space, and as that space grows, so too does China's influence over global finance. And that's why this moment matters, because money is not just money, it's power, it's politics, and it's leverage. The US used that leverage for decades. Now, China is writing its own playbook. So, to wrap this up, the yuan's rise is one of the most important shifts in the financial system in decades. It may still be a long road, but the foundations of a new, multipolar financial order are already in place. And whether the US likes it or not, the world is beginning to adjust. If you found this breakdown helpful, make sure to like, subscribe, and hit that notification bell so you don't miss future videos. And as always, thank you so much for watching. I'll see you in the next one.